Welcome back. The U.S. rushed the seize of assets of Silicon Valley Bank on Friday after it experienced a run on the bank, the largest failure of a financial institution since Washington Mutual during the height of the financial crisis more than a decade ago. The bank had $209 billion in total assets at the time of failure, according to the FDIC. Silicon Valley Bank still appeared stable this year, but on Thursday it announced plans to raise up to $1.75 billion in order to strengthen its capital position. That sent investors scurrying and shares plunged 60%. They rocketed lower again Friday before the opening of the NASDAQ, where it is traded. Silicon Valley's connections to the tech sector became a liability rapidly. Technology stocks have been hit hard in the past 18 months after a growth surge during the pandemic and layoffs spread throughout the industry. At the same time, the bank was hit hard by the Federal Reserve's fight against inflation and an aggressive series of interest rate hikes to cool the economy. When depositors grow anxious and begin withdrawing their money, banks sometimes have to sell those bonds before they mature to cover the exodus. That is exactly what happened to Silicon Valley Bank, which had to sell $21 billion in highly liquid assets to cover the exodus of deposits. It took a $1.8 billion loss on that sale. Meanwhile, tech startups are facing serious financial trouble after the failure of Silicon Valley Bank, the nation's 16th largest bank. Regulators rushed Friday to seize the assets of one of Silicon Valley's top banks, marking the largest failure of a U.S. financial institution since the height of the financial crisis almost 15 years ago. Shelf Engine, a Seattle-based software startup, had all of its money deposited at Silicon Valley Bank, according to Stefan Kalb, the company's CEO and co-founder. As part of Silicon Valley's bank seizure, California bank regulators and the FDIC transferred the bank's assets to a newly created institution, the Deposit Insurance Bank of Santa Clara. The new bank will be paying out insured deposits on Monday. Then the FDIC and California regulators plan to sell off the rest of the assets to make other depositors whole. There was unease in the banking sector all week, with shares tumbling by double digits. The news of Silicon Valley Bank's distress pushed shares of almost all financial institutions even lower on Friday.
Wired out the money yesterday, but Silicon Valley Bank did not honor our wire, so we were not able to move any of our cash out of our bank account. The situation at hand basically means that unless someone comes in and is able to support Silicon Valley Bank through an acquisition, through other means, a lot of us are going to be in a very painful situation very quickly. And so the big ask is for the federal government to come in and step